Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.5% there on the S&P. Nasdaq's down about same. Semiconductor is up a little bit there. Dow down 0.5% also. Small caps pretty much flat. Transport got hit harder today, 1% negative. However, we got the banks, energy, biotech, home builders, and retail printing greens today, while the healthcare is down 1.1, utilities down 0.5% there, emerging market down a little bit. So it looks like kind of a mixed day overall, right? You can see transport's down 1%. You got the healthcare down about 1%, and everything else is a little bit green or a little bit red. Obviously S&P sandwich in between. Bitcoin is down a little bit. Gold, silver miners up a little bit, down a little bit. Dollar down a little bit. Oil's down 1.7. Treasury bond up 1.2. And it looks like VIX popped a little bit today with the equities down, or some of the indices being down today, or the S&P down about 0.5%. So with that, VIX is up. So let's stay with the S&P 500 ETF. Spider 65-minute chart here. So it looks like, so we talked about on the last night's daily update analysis, market closed right about here, and you know, bulls really needed to see a follow through reclaiming the short-term moving average, but it needed to stay above it for a couple hours, and it kind of did that. You know, you can see a second hour, third hour, and it looks like the fourth hour we lost that short term. So you can see that support, that short, when the short term moving average was reclaimed right here for 2 hours, trying to hold it. But I think the pressure came about with this down gap. So I think once, you know, we got up very, very quickly here, and you got near to that gap area, and you see on the second hour, I think that sell-off, or the second hour red candle, put a little bit of dent on the first hour thrust. Not able to, first of all, not able to, you know, fill this gap. So know that there's a resistance there. And obviously that's the overhead supply. There's a prior resistance along with the gap area. So kind of like a double resistance there. But I think it would have held up maybe 50% or above that green candle. I think had a higher chance maybe on a third or fourth hour and go up and fill it. So I think when we completely lost the first hour gain on the second hour, I think at the time, bulls' confidence were a little bit questionable at best. Tried it one more time on third hour right here. Bears pushed it. Bulls trying to hold above that short-term moving average right here. But I think the second hour impact was a little bit too big, especially right on their overhead supply and the gap area resistance. And then it looks like a lot of people chased it, right, intraday right here on the first hour, placing their stop just underneath that candle. And that's what that fourth hour price action is. Those short-term people got in the first hour, getting stopped out in panic, right? And it came down, and you can see my secondary short-term moving average getting retested. It looks like fifth hour, we saw a little bit of bounce, and with that hammer candle, but on the last hour price action, negate potential, hammer candle there. Only way to really revive this hammer candle right here, you see right here, is to gap up tomorrow morning first hour up at like 450 and then see a bullish run. That's the only way that you can revive that bullish hammer candle. If not, just hanging around, it's not going to cut it. So you can see that's a 449, which we talked about on the last night's update. And, you know, coinciding with my secondary short-term moving average, putting a lot of pressure on here last couple of days. 449 getting hit one more time, and this gap already still not filled, still open, right? And so lower highs continue to cultivate there, and bears definitely did see that win for the today after faking out some bulls in early hours test session there. Let's actually zoom out a little bit and maybe if we can get a better idea where next support level is gonna be. So first of all, I drew that support going from right here, right? That's back in mid-July low, and then you can see mid-August low, and then I drew that support from here to here, and that coincides with the gap area. So that's gonna be a double support there. So if in an event that tomorrow bears bring it down, right, we continue to see price sliding to the downside tomorrow, we want to expect 447 and 446 to be that support, right? That's kind of the double support. So it will be strong support there. We got the gap area. It's still open. That's an up gap, and then rising uptrend support. So in that vicinity, it's gonna be a support. So you can see my short-term moving average is starting to decline now. It's telling us that short to micro-term sentiment start to shift to bearish, and my secondary short-term moving average is moving sideways, telling us that we should be neutral in the short term. So in the micro term, let's give benefit of the doubt to the sellers in the micro term. In the short term, let's be neutral, because you can see my secondary short-term moving average is kind of moving sideways, something like this right here. And next level of support would be 447 and 446 should there be another downturn tomorrow. Bears, this is a great chance because you have this down gap still open as of today. So you have a good chance to go down here and fill this gap, this up gap that was open back in August 26th. Bulls is better for the buyers if they can actually keep this gap open. If they can get this open, there's a good chance we come down, bounce right back up, maybe some zigzag, and we can get right back up here and fill this gap, right, that down gap, and then on the way to the new all-time highs, maybe 456, 457, right? So I think bulls want to keep this gap open, bears want to fill it, and that's the objective for going into tomorrow and next week. Let's check out the oscillator and see if we can extract any more information. So we see that whipsawing activity here, right? So the oscillator actually initially saw that what it looked like a breakout, and then we crossed right back down. So actually I have to draw it this way, right? Because of that, it crossed back down. This is the support level right here, as you can see, right? That's a support, that's an oscillator support, that's an oscillator support, right? But this support can still be, it still can act as support. Let's say if this thing comes down to 447, and then let's say it bounces up from 447 or 446, somewhere in that vicinity, right? Let's say it does that. Then this oscillator will come down to retest that support. It may be, a little double bottom, right, on the oscillator double bottom here, and then it can get back up. So this is a pretty strong support here. It goes all the way to early August. So this support been holding more than a month and 10 days or so, something like that, right here, and so we're retesting right now. So I can see that we are at 447, 446 support on the price action and oscillator support right over here. So let's see how the market plays out. Keep in mind, tomorrow is Friday, so there will be no video. I'll be out of town this weekend traveling, so I won't be back until, so there will be no video on Monday. I'll come back on Tuesday, and then we'll re-examine the situation, right? Check out 447, watch the 447, 446, look at that oscillator, the support here, right? And if things get really, really bad on Friday and Monday, there's another gap right here, right? 443, 445, all these gaps, that's what bears need to go through. So this is why it's a difficult task for bears, because we got all kinds of supports. All these gap bear is gonna provide that cushion. You guys enjoy this evening, right? Good luck trading tomorrow. Have a wonderful weekend. I'm gonna come back to you on Tuesday.